Hi, good morning, and welcome to Capital Grounds Podcast. I'm your host, Nick Miller. I've got my co-host, Joe Fisher here. We're with SITG Capital, a real estate investment firm based out of Texas currently. Got properties in Austin, Dallas, Houston, currently expanding and looking to move outside of Texas, across the Sun Belt. And we've got a lot of great deals in process. But Joe, how are you this morning?
Nick, doing well. How you doing?
You know, it's hot and humid here in Kansas. I can't complain too much about the heat because I know you've got it worse, but
Oh yeah.
the humidity is brutal down here, or up here, I
Yeah, I
guess.
mean, luckily it's dry for us right now. Luckily, or I mean, you could look at that negatively too, I suppose. I think a lot of counties are in a drought, so
Mhm.
that's unfortunate, but yeah, the heat has been brutal this summer. I think we thought it might be a little bit less than last summer, but that's not how it's panning out. So we're hanging on. We got 3 months of the year that we struggle down here, and the rest of the year the weather's pretty nice. So most of us take it with a grain of salt.
Yeah, that's about all you can do, right? You just gotta
Yeah,
just power through it. Uh,
absolutely. It
well,
has
cool. Well,
changed
hopefully,
my coffee drinking habits though, Nick. I'll say
yeah,
that.
yeah, yeah. What are you doing now?
Just doing iced coffee right now. I
Iced
mean,
coffee, iced
yeah, it's
coffee.
hard to drink hot coffee when it's as hot as it is, all of that. And it's funny, I was thinking about this because I went to the store to pick up some more coffee, right? And I was gonna get Cafe Bustillo because I've just been on that for a little while. They ran
Sure.
out. So I got a bag of community coffee, Cafe Special. I think it's Cafe Special, Especial. I don't remember how they have it on the packaging. Either way, doesn't matter. Uh, it's actually funny because when I started drinking coffee, which I really wasn't a coffee drinker until probably 24 or 25, somewhere in there.
Same,
Uh,
same.
yeah, so I really didn't drink it when I was younger. But I started drinking coffee on that particular coffee because that's what at the time I worked at a Scottrade branch, for those of you that remember that company a long time ago. That's what everybody in the office was drinking, and they got me on it, man. So ever since
Really?
then, I've been
Wow.
drinking coffee, and so kind of had a little bit of that nostalgic feel to it, I suppose. That medium dark roast that's not too much, but pretty smooth, and just got me to where, hey, I can put something in this and I can drink it, and kind of got into the habit of drinking coffee with that particular brand and in particular coffee.
Wow, that's great. Community, I don't know that I've heard of that company. Are they a Southern company or a local
Yeah, they're
company?
pretty big. I think they're based in New Orleans. I mean, they're definitely, you know, big time. I mean, we like to support the local coffee places and we like to go get coffee from them. But every once in a while, you're at the store, you need something, and you know what's good. It's like that guilty trip that you take to McDonald's. You know what you're gonna get. So sometimes you do it, but it
The
may not
devil
be
you
your
know.
preference. Yeah, exactly.
Yeah, I'll tell you that it's funny. The coffee I started drinking on was a private label. You know,
Hmm.
Kroger brands, they have their own
Oh yeah.
private selection. Private selection is their like luxury, their premium private label brand. And
Yep.
they have a vanilla, not French vanilla, it's just vanilla flavored coffee.
Okay.
And I love that. I love that. And I remember, when I was first drinking coffee, I was like, oh, you got to try this to people that were consistent drinkers. And thankfully, they were
You're
kind
probably
enough
like,
that,
nah.
yeah, yeah, no, thankfully they were kind enough. They're like, oh yeah, this is really good. This is really good. Anyway, I tried it a few months ago, and
Yeah.
I bought a bag of it and tried
Hmm.
it, and I've moved away from like flavored coffees in general, and oh man,
Yeah, sure.
I couldn't do it. I couldn't do it. So
It's
we had,
yeah, it's never been something that I've been about is those flavored coffees. Now, I like having, maybe something flavored put into it every now and then. But just the coffee with the flavor like you're talking about there, that was always something that was hard for me to get into.
Yeah, we had to put those grounds to other uses, but not that there's
Fair
anything
enough.
wrong with that. It's just, not for me where I'm at right now.
Yeah, absolutely. Absolutely.
But man, well, I'm busting out the classic Yellowstone mug. I gotta rock it
Oh,
when I can
perfect.
because gotta keep the story going. We're
I've
trying to
got
support. Oh yeah,
I've got this one here
hey,
from Mexico.
I love it.
So wife and I went to Cabo for fifth wedding anniversary. Picked that up there. They got some beautiful artisanal offerings down there. And there was one in particular, I loved it, but it was a $50 mug, and I was having a hard time paying $50 for a mug, so I didn't. We kept looking around, found some cheaper options that we liked, but I still may go back if we ever go back and grab that one.
I don't know, that mug you got looks pretty. I like it.
I
I
like
like
it,
it.
yeah, yeah.
I don't know what that design is, but I feel like, it looks like that design replicates kind of the lace that you see on a lot of I don't know, dresses. You know what I mean? I
Hmm.
don't know enough about Mexican history and culture, but it's a pretty mug. I like it. I like it. That
Yeah,
design is familiar to me for some reason.
yeah, I know what you mean. I know what you're talking about. I think, and you can tell with some of these, it's not machine made. They're not perfect, and I kind of like that. I like when you find a something that you can tell is handmade.
I agree. I agree because that's it's part of the story. You want something unique.
Yeah, exactly. It's unique. I think that's a good point.
Well, what's going on in the news? Any good articles you've read recently? I know we've hit some
Yeah,
all-time
yeah,
highs in mortgage rates. Well,
we
not all-time
have.
highs, but local highs.
Yeah, relative, right, exactly, relative
Yeah.
to what we've seen in quite a while. Yeah, I would say there's a theme here. So home sales dropped in July. We're actually at a pretty close to quarter century low in supply. And so that's what's driving, home sales to be as low as they are. And like you mentioned, Nick, I think a big factor in that is the rates, because if you locked in, a 3, even 4% rate not that long ago, you're probably not really that willing to go out and buy something different and put your house on the market for, a 7% rate. Uh,
Right.
it's it just doesn't make a lot of financial sense. So people are staying in their homes longer than maybe they have been before. Things like that are really affecting supply, but it also carries over to the commercial market. So there was a Dallas Business Journal article that was really interesting. Is basically talking about how the first 6 months of this year for commercial sales are actually lower than the same period when COVID began.
Oh, wow.
And I don't know if you remember that, but there were several months where things just completely stopped during that time period. Yeah, rates
Yeah.
were low, et cetera, right? The Fed dropped into zero back then, but it just, it was, basically ground to a halt for a while. I remember being in the TD Ameritrade office and just seeing the market drop 10% every day and thinking what's going to happen. And then I remember driving home, and it's 5:30, 6 o'clock when restaurants should be busy, and looking off to the side of the interstate and seeing parking lots empty and just thinking what is going on. So it's just crazy to me that that was, the time it was that we experienced all of that, and the sales volume was actually higher than it has been so far this year.
Yeah, that's wild. That's wild. Um, you know, to take a little bit of a step back regarding, home sales, I think
Hmm.
what we also saw were a lot of people making decisions. I'm not going to say prematurely, but earlier than they would have normally, right? With late rates as low as they
Probably
were.
rushing it. Yeah. Hmm.
Yeah, absolutely, absolutely. I
Hmm.
know, got multiple friends and family members who, bought a different house, and they weren't in a position to do it, right? They weren't prepared, they
Yeah.
weren't planned, but it worked out in their favor in the end, and they were able to
Right.
get into something, you know, bigger or nicer or different location or what have you. So I think we're going to see this for some time. I think we're going to see a period where people are in their homes for, you know,
I
like
agree.
you said, longer than they would normally.
Yeah, I also think, I mean, just supply in general isn't catching up in most places. I think that really shows right now, because if there was enough from a building perspective, I think maybe we wouldn't have quite so pronounced supply issues, right? We shouldn't. I did think it was interesting. I don't know if you saw this. Warren Buffett purchased quite a bit of, so D.R. Horton, they're based here in Arlington. I think he purchased $700 million worth of stock in D.R. Horton, and a few other the larger builders he went out and purchased, because they're actually having a really solid, uh, solid balance sheet right now. They have good ample opportunity, and again, supply just really hasn't caught up in most of the markets that they operate in. So I think we'll continue to see that. That's why it's important to look at the markets that you invest in. There was one other article that kind of tied into it, just talking about there's 4 North Texas cities, so Dallas area cities, that are rated as the best real estate markets in the nation. So 4 of the top 10 are here in North Texas. You've
Wow.
got the first, uh, number 1, number 2, number 4, and number 6 in the top 10 are here. So that's why it's really important that you look at the markets that you're investing in. And we're actually going to talk about that today, um, in the study we're going to do over a project that we just finished getting funding for, and we're starting to work on.
Yeah, I mean, knowing you got to know what's in your back door before or
Mm.
your backyard before you really dig in. But that's wild. That's wild. 4 of the top 10.
Yeah,
That's
and
incredible.
Austin's number 8, so 5 of the top 10 are Texas markets. So if that gives
Wow.
you an idea, there's really a theme here as far as where we've seen people want to move, where we've seen the jobs move, all of those
Right.
things. And so we're trying to make sure that we're investing in the right markets in order to not only take advantage of that, but help alleviate some of the supply issues that we see.
Now, if only we could get, well, right in Texas, construction costs are a little more reasonable, but we're
Hmm.
seeing some higher construction costs here farther in the north, Central America. I don't know, if that's farther in the north, but you know what I mean.
Yeah,
Um, we
Midwest.
just, yeah, we got to solve some of those problems
Hmm.
here, and I think hopefully we'll see that supply issue uh, find some respite over the next couple of years because uh, the supply issues aren't localized. We're seeing those all over the
Right.
country.
Yeah, absolutely. You're right.
So we'll see what happens. But yeah, let's dig into
Hmm.
our I'm going to call it our deal breakdown today.
Sure. Yeah, that's a good way to put it.
Let me see here. So we've got a property in Dallas.
Hmm.
We're going to call it 24. And like Joe mentioned, we just got funding for it or confirmed funding within the last week or so.
Yeah. So a little background on that. We closed funding. We didn't even have to put this one on our website, because we were able to go to our existing investors and raise enough money for this particular project. So look, it's important for you guys to understand that that's how we operate. We take care of our investors. So if you want to be, the first to know about projects, if this is something you really want to get into, it's important that you let Nick or myself know. And it's also important that if you have money you want to invest, if you invest it with us, understand that we're going to come to you first with any opportunities. That's just how we operate. So we take
Is
care of our investors best way we possibly can, and that's one way we do it. So while we're going to cover this one, we would love to be able to offer it up to more people, but we don't oversubscribe any properties. We stick to a strict due diligence process and everything, and we make sure that we're taking care of our investors first. So we were able to get the funds raised without going out to the market, and we're very lucky that we can do that. But at the same time, again, we think this really does benefit our investors. So you should become one if you're considering it.
Agreed, Joe. And if you've got money, if this is something you're looking to dig into, know that we've got numerous projects. We are constantly reviewing new projects, doing due diligence,
Mhm.
and looking to see if it makes sense. So whether it's yourself, if you've got funds that you're looking to invest, if there's somebody you know, or if this is something you're interested in learning more about, a passion of yours, or if you think there's somebody that may be of interest, send them our way. Love to have a conversation with them. Remember, SITG's skin in the game. We invest in every one of our properties alongside our
Mhm.
investors because we want to sit on the same side of the table as our investors and ensure that that our goals are aligned with you. Just about every way we can be.
Right.
So we take that very seriously, very, very seriously. But yeah, 24 is an exciting project. Joe,
Mhm.
let's talk about some of the details.
Yeah, let's maybe start with just the location and talk about, kind of why we picked this. Everybody in real estate always talks about how important location is. Obviously it is, right? So we were talking about
Oops.
some of the supply issues. We were talking about, the markets that are doing well. So let's dive in a little bit, Nick, on just kind of where this is and what's going on around it as to, why we chose this as a good opportunity.
Yeah, so currently this project's positioned in downtown Dallas in the
Hmm.
Cedars district, which is recently, within the last year, announced a $3 billion renovation, reinvigoration project, whatever you want to call it. They're pouring
Hmm.
$3 billion with a B into that local area. Um, Joe, talk to me about some of the big changes are going to happen there.
Yeah, so I live in this area. There's a lot of changes coming down the pipeline. I'll tell you guys, the big headlines would be what Nick's mentioning the convention center is getting rebuilt. They're spending 3 billion to rebuild it into the neighborhood. As a part of that, they're redoing something called the I-30 Canyon in Dallas, which is really just where I-30 kind of sinks below the city and runs through there. They're redoing that, and as a part of that, they are including deck parks throughout the community. So instead of there being open highway space, there will be bridges with parks built above the highway. They've already got these in several locations in Dallas. I know other cities are doing it, but it's a huge value add for the community. There's other developers doing a lot of things. The one that's in the news is called So Good. It's going to be a very big um, development. They've already started on demo for it, all that stuff, right? And our property is actually next to this. So that's one of the reasons we wanted to move forward with it. But in just talking to our architect, we know there's a lot of movement in this area. This is not my words, but our architect believes by 2030, we're going to see this as something more similar to what uptown Dallas is, which is, kind of an extension of downtown Dallas, that we'll see that here down in the Cedars. And with that, the fundamentals really support it, right? So we have another project that we're building, and we've already gone through all the hoops and everything to get to the building stage, and we're doing demo, we're building that out. And when we first looked at it, we thought, hey, maybe $2 a square foot is what we can get rents to. Now we're seeing 230 a square foot. So it's in now. I don't know if it's going to increase much more than that in a short period of time, but the fundamentals are really good for the area. So we chose that in particular for that. Now, Nick, interrupt me with questions, but specifically where this property is, it will be catty corner to one of the deck parks that we've talked about. There's a bridge that's going across the interstate that will connect it to the farmers market in Dallas. So this is really going to become a much more connected community to the rest of downtown Dallas. And we see a lot of value in that over the next several years.
I love that, and I'll tell you, I love the idea of a deck park. I think that's such a
Yeah.
great way to take advantage of the area around you, especially, in the middle of the city, right in downtown
Hmm.
Dallas. Bring some greenery, bring some life to the area, and just make it so much more than different shades of gray and concrete, right?
Right, right. Yeah, we all know it's hot, and one thing that does help is having more green space. It reduces the what they call the urban heat island, right? Where you have a bunch of concrete and asphalt that heats up during the day and gets released. And so, typically cities are much warmer than the surrounding area. So I think this is a good step for us to start to, address some of those issues, and it makes the community better. It gives access to tenants to beautiful parks. And so I think it's just a win across the board.
Agreed. Agreed. I'll be curious. You and I have looked at plans of how they're looking to do that. I'll be curious to see how
Mm.
it unfolds and what it looks like 10, 20, 30 years down the road, especially
Yeah.
with some of these trees and with new concepts like this, relative to what we've done historically, right? Uh,
Mhm.
eh, I'm certain that there are going to be some unique issues and some unique problems, and I look forward to how they resolve those. But yeah, let's
Me
dig
too.
into actually before I dig into the numbers. Uh,
Yeah.
what's the favorite thing that you've got? What are you looking forward to most about some of the changes they're making in the Cedars district?
I mean, I think it's just the fact that there's a lot of unused space over here. And I do believe in urbanization as a way forward for us to be able to provide more housing at a more affordable rate and be able to reduce our reliance on cars. If you don't want to drive, you shouldn't have to. Things like that. I
Sure.
mean, I think the idea of the 15-minute city is such a great idea. If you guys don't know what that is, look it up. I think it's such a wonderful idea, and I wish we incorporated that more into our cities. I love to travel, Nick. I know you do as well. And whenever we travel, I connect really well with a lot of the cities that are older, that have a little bit more character to them, that aren't so based around cars. And so I'm looking forward to being able to walk to so many things in the community, just personally. I think that that's going to be a really nice feature to have. Um, but yeah, Nick, maybe before we get into the numbers, maybe we should talk about kind of the preliminary design too, and how we're looking at that.
Yeah, yeah. You know what I'll tell you when we talk about what you mentioned, a car-free kind of area.
Hmm.
Um, I imagine something like I've only been to Boulder a couple of times, but there's an area of Boulder, I think it's downtown Boulder, where
Pearl Street.
uh,
Yeah.
Pearl Street, exactly.
Hmm.
Yeah, where cars aren't allowed and they've got
Hmm.
shops and restaurants and cafes and whatnot. And I think that would be such a great way to design the down. I mean, frankly, any city, but the downtown portions where you've got a lot of high rises, a lot of high density housing. I think that would just be a fantastic way to be able to live in your community.
Yeah, there's a great Freakonomics episode. If you guys like podcasts, you probably will like Freakonomics, and they talk about kind of the numbers behind New York City, the amount of space dedicated to cars versus pedestrians, and then how that's pretty much flipped as far as how many people there are pedestrians and how many people are driving, and how much safer, number one, it would be for us to have more designated areas without cars, but also just how much more you can unlock, to Nick's point, from a community perspective, and create some more community and cultural value.
Absolutely. I mean, if you look at just a regular suburban neighborhood, frankly,
Mm-hmm.
you could get, I mean, depending on the neighborhood you live in, you could get so many more houses built if streets didn't take up such a large portion of
Yeah.
the area,
Yeah,
which I
maybe
get.
we'll have to do a podcast on this, Nick, because we
Yeah,
we
yeah,
seem to
yeah,
both agree. But
yeah, yeah. That'd be good. That'd be good. But okay, so let's talk the general structure. So
yeah,
I wanted to start with the unit mix just to give an idea
sure.
of kind of the overall breakdown, and then we can go from there. But yeah, if you can see the screen, if you're listening to this,
Mhm.
I'll try to explain verbally. But if you are watching this, then you can see um, our little chart here with the unit mix breakdown. But we've got a large portion of the building, over 50% will be two bedroom, two bath
Mhm.
arrangements. Um, you know, studios, one bedrooms, high efficiency units will be just under 50%. Um, and while studio and one bedrooms are generally more profitable, we wanted to try and provide more housing for, growing families or couples beyond just individuals to try
Right.
and alleviate more of the problem than just a bunch of studios and one bedrooms would provide.
Yeah, well said, Nick. The other reason for it is we've done a lot of market research, and we see that there is a higher demand for two bedroom, two bath units just in general in these areas. You have, to Nick's point, a lot of people that, may be moving in as a couple, for example. They want a guest room, or they want an office, or, they want a little
Small
bit
family.
extra space. Exactly. So I think, we've kind of skewed it a little bit more towards that. Nick's right. Studios and smaller units on a per square foot basis tend to be more profitable. But we're not just about that. We're about long-term success too. So that's why it's skewed a little bit more towards these larger units.
Yeah, and I will say, you know, as we've seen the work from home lifestyle become more prevalent, especially in cities like Dallas or
Mm,
Austin, where you've got a younger crowd, a tech-heavy mix in the professions. We've got over a quarter of the overall units with a home office available, which I think is a
yep.
real value add.
Yeah, agreed. So that's kind of our preliminary mix as far as units go. We'll fall somewhere in there. It might change just slightly, a few things depending upon once we get closer to the final design stage of it. But yeah, I think you made some good points there, Nick, and we're looking forward to how this one turns out.
Agreed. Agreed. Let's hang on here.
So I also want to talk about just kind of the preliminary design of how we're doing it from a visual standpoint, the outdoor space, etc. So this is almost an acre that we're building on here. So and this will play into the numbers a little bit. So we're looking at hopefully getting more than 180 units, but we're saying 180 is kind of our worst case scenario. We don't have a lot of height restrictions over here, so that helps us achieve that. We are right next to the interstate, which we talked about, the canyon, which there's some bad to that, but there's some good, honestly. Our views are not going to get blocked. Our views of downtown Dallas will not get blocked. So the way we're going to set it up, and Nick, I don't know if you have it pulled up, but the hope is that we can do kind of like a horseshoe type of layout around an amenity deck in the middle. And that will hopefully allow us to give as many tenants as possible a view of downtown from a balcony, from their window, etc. Right? So we're really excited about the potential design. We're going to do parking in the back of the building, where it's next to kind of a more industrial type of property. And so we're going to do the parking in the back to not only hide that and just make the street view a lot more pleasant, but in order to maximize the views that we're going to have with this particular location as well.
Yeah, let me see if I can. I'll see if I can pull that up here quickly.
Yeah, slide 11 has the preliminary design, what we're planning on
Mhm.
doing, and it'll change some. It's not set in stone, but we go out and we do the best we can to get close at the beginning. And then it has some of the numbers there, Nick, so we can certainly start to cover some of the numbers from that.
Yeah, hang on here. Yeah, I love the way that that at least from
Mhm.
a design perspective, the projections look really nice. If we were in a position to explore a little bit, this is a place that personally I think would be great to live in because you get
Yeah.
so much of the area and so much of the culture in a beautiful setting. But yeah, you can kind of get an idea here if you're able to see this. You can kind of get an idea of the way that it'll look as a whole. Um,
Mhm.
but to pivot and talk about some of the numbers, right now our total projected return for the project is about 84%. So that means if you put in $1 million, as an example, our projections show that we'll be able to pay out about 1.84 million at the end of the day, at the end of the project. Uh, Breaks down to an annual return of about 25% on an annual basis.
Mhm.
Total
Yep.
project time is 36 months. Let me pull up the.
Yeah, and some context around the time. We're hoping it's less. The city of Dallas has really had some struggles on the permitting side, so we're accounting for more from that perspective. But we're really hoping that they're able to kind of bring some of that in by the time we get to that stage, and that it'll go quicker than that. But we're falling on the conservative side of 36 months in order to do this. To Nick's point, projected ROI, we're saying 84%, and that is us projecting if we're going to sell at that point based on what we talked about a little bit earlier in the podcast on the price per square foot rental, based on a lot of things going on in the area. We do believe that this is a very good hold as well. So we have projections in there as well if you want to know what it would look like for you to hold on to the property for a greater period of time once it's completed.
Yeah, and I've got that pulled up here. So, if we were to sell upon completion, you'd be looking at an annualized return of about 25%. If we were to
Mhm.
hold it, whether that be, over a 5-year period or longer, the annualized return would drop to about 20%. But that's still a phenomenal number on an annual basis.
Exactly. Yeah.
And it's great to have flexibility like that.
Yep. Absolutely. So we always try to do that when we look at the numbers. We try to make sure that we're giving multiple scenarios because not every investor is the same, right? Some people are going to want to get out of an investment as quickly as possible and take those gains and do something else with it. And some people are going to want to hold on to something and be able to benefit from the cash flow and benefit from the appreciation that comes with it.
Right, right. And for viewers, if you are an investor and we do get to, say year 3 or year 4, whenever
Mhm.
we refinance or have some sort of cash event or capital event, if you're in a place where you would like to cash out, those are certainly conversations we can have at that point. Um,
Yep.
Obviously with a build project like this, you are locked in for a period of time. But and of course we go over all that when we make the initial investment with you. Um, but know that you're not, if we don't choose to sell, you're not locked in for 15 years, right? Though you certainly
Right.
can be
Right.
if that's the case.
Yeah, exactly.
So we've got average unit size of 916 square feet currently based on 180 units.
Mhm.
And total building size is 162,500 square feet. Our total project cost is just over 34 million,
Mhm.
34.2 million roughly, um, with a total investment request of 8.5 million, 8.55 million.
Mhm.
So
So
it's per
Nick,
door. Yeah, go for it.
you just on the invested cash you mentioned earlier, we invest SITG Capital invests directly in each investment, right? So for this one in particular, we're very high on it. We generally do 10 to 20% of the cash needed, and we're doing 20% on this one in order to, take advantage of what we've kind of already talked about. But, and show that we're aligned with our investors on it as well.
Yeah, thanks for adding that, Joe. Thanks for adding that. Um, yes, we're looking at a total per door build price of 157,000 roughly. It's our current projection. And yeah, I think we've got a great opportunity here.
Mhm.
It's it's going to be interesting because one of the fun parts about doing investments like this or real estate investing in general is you can go through pages and pages of plugging in numbers and looking at calculations
Mhm.
and Joe knows that I'm all about the details. And then at the end of the day, things will shake out differently. They'll always shake out differently, and it's always a fun adventure to watch it happen over time.
Yeah, so I tell our investors every time, and we have some that have done quite a few projects with us, so they understand this. But look, you cannot predict the future. I don't care what it is, whether it's what a building's going to end up being when it's completely finished, right? Or whether it's like we talked about earlier, the weather. You can't predict it exactly right. It's working on predicting the future and you just don't know. There's variables that are going to come in. There are always problems in development. You got to remember that when you go into it, right? So you can't get frustrated. You can't, give up because there are always going to be problems. And all you can do is work through those problems and do the best to find solutions and do the best to mitigate the risks, which is why we underwrite the way we do, Nick.
Absolutely. Absolutely. Joe knows that I'm a stickler for getting things just right when it comes to the numbers because uh, just like we invest alongside our projects, because we want to have our goals aligned with our investors and sit on the same side of the table as our investors, we
Mhm.
treat every dollar as if it were our own.
We
And
do. Yeah.
from from my seat, that means double checking to make sure that we've done all the due diligence, that we've done correct, calculations, that we've made
Mhm.
conservative projections. Because at the end of the day, if we can build in cushion for, unforeseen issues or unforeseen problems, delays, what have you, at the end of the day, if we can do all of that and still have a profitable project, then we'll be in good shape. We'll be in good shape. And it's important to me and to us to have that kind of confidence and that level of confidence because again, we treat every dollar as if it were our own.
Yeah. Well said, Nick.
So, when we build out, we talked a little bit earlier about the the plan A, B, and C that we build in, right? Plan A being we sell it upon completion. Plan B being that we hold it for a period of time and then sell it, and Plan C being we hold it long term. We
Mhm.
build those all in, and when we build out the pro formas and send them out to clients, we have all of that. So if you're looking at this, if you're watching the video, you'll see we've got 15-year hold IRR with
Yep.
the assumption that we sell at year 15, and we've got a separate number assuming that we have two refis over that 15-year period with another refi, the second refi at year 15. And in both of those scenarios, we're looking at 24.9 and 23.7% return. So still excellent, excellent numbers.
Mhm.
But anyway, it's a great project. I'm excited to see continue to move forward. I don't know if you can see this map. I don't know how to zoom in here when I am screen sharing, but you can see a layout of the area in general and see how much green space there will be upon completion. So it's going to be
Oh
really
yeah.
nice.
Yeah. Yeah, and all of this is kind of timeline wise coinciding with each other, right? They're starting on what we talked about, some of those things with the green spaces, the interstate rebuild and all of that. They're starting on that next year. So by the time we break ground and by the time we're completed in 2026, they're going to be well on their way to having some of that completed. So we think that's going to, increase demand as well and make it just a great long-term property. So we're very, very excited about this one. Happy to be a part of it. Again, happy that we're able to have investors that are interested in this and that we're able to invest with them because again, we think this is a winner for us.
Joe, I enjoy going through and doing these deal breakdowns. I think we'll be doing them more often here as we move
Yeah.
forward. Um, if you're a viewer or a listener and you like what you see, you want to be involved in the next project, again, give us a call. We talked about it at the beginning. If you've got questions about a project like this, maybe you're looking to do something on your own, you're looking to buy,
Hmm.
duplex or triplex, quadplex, what have you, or maybe you're looking to build something and you're wondering about some of the ways that we do our due diligence and our calculations, what have you. If you've got questions, give us a call. Leave a comment, shoot us an email, whatever it takes. We're happy to help in any way we can.
Yeah, please let us know. We've got other episodes too, like Nick mentioned, where we talk about smaller properties. We've got a great one with our good friend Fred that he covers how to get a property for little or no money. And so if you guys really want to get into this, that's how most of us got started. We got started small and we built up to this. We built up to scaling. But part of what we try to do here as a firm is we try to make that available to as many people as possible because with scale, you're able to produce a better product. You're able to do it more efficiently and therefore your returns are higher while also keeping the costs, much, much lower for the end result. So please subscribe and go back and listen to or watch those episodes if you're just learning about this. If you've already invested, like Nick mentioned, or you're familiar with this, let us know. We would be happy to let you in on some opportunities to be able to invest in similar type projects. We've got them in multiple markets, like Nick mentioned. We've got some in Austin, Houston, and Dallas areas. So let us know what you're looking for, and Nick and I will make sure that you're taken care of from an investing standpoint on that.
Absolutely. Absolutely. There's that word. So, well, Joe, I think we've covered just about everything we can right now. Any
Yeah.
last thoughts or last items you'd like to add?
I mean, I think, we'll just, like Nick mentioned, we're gonna try to keep you guys updated more and more on these types of things. Not every property is going to yield a 25% return annualized, right? Keep that in mind, guys. But we do our best to find really good properties that if we're developing, our goal is aggressive. Our goal is 20%. Are we going to achieve that every time? No, we're not. But hopefully, averaged out, we can do that, and we can give you guys, a really good glimpse into how we find those deals and how we execute on them.
This is one of the things that I love about real estate. 20% is a phenomenal return when you compare it to, the traditional capital markets, the stock and bond markets.
Right.
And while we deal with our own set of variables, risks, changes, we've got our own types of volatility, but a lot of it's, there's a much lower correlation to traditional markets, and these are excellent opportunities to build wealth and, provide additional diversification to your overall investment portfolio. So anyway,
Agreed.
but Joe, I appreciate your time today. Thanks
Yeah,
for
thanks, Nick.
chatting and digging into this, and looking forward to talking again next week. We'll see what we've got on the docket and go from there. But in the meantime, everybody, have a good week. Crush the job, crush the career, enjoy retirement, whatever it is you do. Have a good week, stay cool, and we'll look to talk next week.
Yeah, thanks, Nick.
So, all right, we'll see you later. Take care.